I'm glad to see you did.
Good morning. We're going to bring the meeting to order, and I'll acknowledge that Commissioner McDonald will be joining us on the phone. I'm sure we'll hear her when she does. Call for a motion and second to grab a leave of absence to Commissioner Young, who's out of town.
So move.
All in favor?
Aye.
Any opposed? Thank you. Call for a motion and second for approval of the minutes of the regular commission meeting of October 10, 2018. All in favor?
Aye.
Any opposed? Thank you. I'll ask Curtis to provide the Executive Director's report.
Thank you, Madam President. If I could start first to draw everyone's attention to our safety champions up here, another great group of port employees in different parts of the organization who are really emphasizing in the work that they do a focus on safety. So, Stan, I wonder if I could ask you to start us off with a safety message.
Yeah, my message this month is aims to bring awareness to road trip safety for this holiday season. The American Automobile Association projects that there'll be 48.5 million Americans will hit the road to journey 50 miles or more during this Thanksgiving season, and which is nearly about a 5% increase over last year. Driving is probably the most dangerous activity many of us perform. With more vehicles congesting the roads, the travel risks become greater. Bad weather, short periods of daylight, and distracted drivers add to this danger. So plan ahead, use Trip Check, and expect delays. And here are some driving safety tips for for this holiday season. Make sure your car is in good working condition for a road trip. Pack an emergency preparedness kit and supplies in the trunk. I hope all of us have already done that because I've stated that several times in a bunch of my safety messages. Share travel plans with a family member or friend. It's always good that people that you're not traveling with know where you're going in case there is a problem. Check the weather along your route and plan for several and travel around any storms or hazards that may be coming. Be well rested and alert. Buckle up, slow down, and don't drive impaired. Follow the rules of the road and use caution in work zones. And give your full attention to the road. Avoid distractions such as cell phones. It's not up here, but one of the items that we're providing in our safety message out to the field this week is really a chart that kind of shows distracted driving and the use of cell phones while driving. America is the worst country in the world for this. So there's some real improvement that could be had here in our country. Make frequent stops during long trips. Rotate drivers. If you're too tired to drive, stop and get some rest. And if you have car trouble, pull off the road as far as possible and have high visibility clothing for roadside inspections and repairs. And I definitely suggest using flares if you do have them in your car. AAA expects to rescue nearly 360,000 motorists at the roadside this Thanksgiving. Dead batteries, lockouts, and flat tires will be the leading reasons for AA members and what they'll experience if they do have car trouble. AAA recommends motorists also take their vehicle to a trusted repair facility to perform any needed maintenance before heading out. Have oil changes, fuel level checks, battery tests, and tire inspections, and those will go a long way to reducing the chances of a breakdown. And so I just ask everyone to do your part and be safe while you're traveling this holiday season.
Great. Thank you, Stan. I just really want to emphasize the electronics element of this. The data is terrible. It's the first time in the history of record keeping from NTSB over a number of years that we're getting worse rather than better on fatalities. And as my executive team knows, at one of my former employers, it was a firing offense to have a phone in your hand while you're driving, and I liked that. It is really dangerous, and I'll just say to port employees, we're going to have words if any of you is seen by your executive director using your electronic device in your automobile. It is really dangerous. So thank you for the message today. I'd like to start today by really just a shout out and maybe sharing of information. The Portland Airport Fire and Rescue Team is part of a strike team that's gone down to California to help with the fires in Butte County, California. A reserve engine and 4 firefighters are working 24 on and 24 off at the fire. They're camping out. We just heard from them this morning. It's pretty rough, bleak, mostly now searching through burned out areas, putting out spot fires, and are part of what is really a devastating fire. We're very proud of them and thank them again for their service to our community. November and the middle of November is a nice time to talk about elections. I'm going to try not to do that, only to say, for the port, that there wasn't a whole lot immediately relevant to us on the ballot. The one bit of news that I'd say is really good is Congressman Peter DeFazio, with the Democrats taking back the House in Congress, is likely to be the somewhat powerful chairman of House Infrastructure, Transportation and Infrastructure, T&I. And he's been a longstanding supporter of the port and of the airport and of enhanced transportation funding in Oregon. So we're really excited about that piece of news. Otherwise, we spent some time in the port encouraging folks to vote, and we're just really happy about the really high turnout in Oregon. As all of you, I'm sure, figured out this morning, we're gearing up for a busy travel season here. We're coming up on Thanksgiving. The garages are mostly full. Today, I think they're both full. We're really expecting through Thanksgiving and December, through the holiday period, to set new travel records at PDX. Again, the 6th year in a row of travel growth, and we'll most likely hit 20 million passengers this year. So arrive early, depart early, do what you can to prepare for a real constraint, in particular with the parking garage. Recently, international arrivals at PDX got easier. Travelers can now use the mobile passport app to speed up their customs paperwork when they return to the country in through PDX. The app is called @Mobile Passport, and while it doesn't replace your passport, it saves you time in line and eliminates paper forms. I haven't tried it yet, but I think a good complement to Global Entry. We're going to see another concessions edition in the airport later this month. Hopworks Urban Brewery is scheduled to open on PDX Concourse E early in December. Hopworks is a family-owned B Corp, donating 1% of their beer sales to environmental causes, and it's the world's first certified salmon-safe brewery. It's also the home of my kid's favorite cheese pizza, so take note. Good news as we start the rainy season here. Sun Country Airlines recently launched new nonstop service from PDX with flights to Las Vegas and Palm Springs, and starting today, they'll add nonstop flights to Honolulu and Phoenix. So if any of you have issues with winter in Portland, you know what to do. As you know, we've got our own roads to ride and chances we've got to take. The new U-turn lane at Northeast Airport Way and 82nd Avenue is up and running. The existing return to terminal needed to be moved further east in order to make room for the new parking exit plaza that's part of PDX Next and the series of improvements here on the east side of this building. We actually had a day or two of trial and error on the timing of the light out there, but that's all straightened out now. The flow is pretty good. So to return to terminal, you have to go out to 82nd and come back on a U-turn light. Speaking of airport improvements, and in the interest of update on construction projects, Packer, the parking additions and consolidated rental car facility out here, enabling construction continues with the headquarters employee lot expansion, early site work, utility relocations, and the first phase of the South Tunnel extension. We're at about 90% on drawings for the Packer, and the new shell and core are scheduled to be complete early next month, with permitting on schedule for early next year. Terminal balancing is the exciting one this week. For the first time, we're seeing steel come out of the ground over here on the Concourse E extension, again adding 6 new gates out there. Over 1 million pounds of steel have been delivered to the site, and due to the length of some of those steel pieces, some of those deliveries occur at night, so they don't interfere with operations out here. Pouring of concrete for grade beams and passenger boarding bridge pedestal supports continues. Topping slab is at about 60% complete. And the small business participation continues at about 21%, just above our goal of 20%. T-Core, our initial project phasing plan and schedule were developed by the Hoffman-Skanska team. The current plan estimates about 3.5 years for construction of the western expansion portion of the project. We were just talking this morning about the work we're going to have to do to help passengers through that development as it occurs. Commissioner O'Halloran, I think your analogy was what? The car with doing work on the car? Was it the airplane with the wings off? I forget what it was. While it's moving, correct. And it's whatever the analogy is, it's not good. The project schematic design will be completed this winter, incorporating cost savings options and identifying project
Welcome
phasing
to the
approaches.
conference service. Please enter your access
Sounds like we're getting
followed by the pound sign.
Commissioner McDonald on the phone as we go. The Amazon Fulfillment Center at TRIP will be honored later this month with one of the Portland Business Journal's CRE Transformer Awards, recognizing
There are
outstanding work.
2 participants on the
Commercial real
call,
estate
including
and
you.
ethos
You are
of
joining
Portland.
your conference as the host. For a menu of available commands, press *#.
Good morning, Commissioner McDonald.
Good morning.
It's Curtis. We're just finishing my executive director comments.
Thank you, Curtis.
The Amazon project, valued at over $200 million, was developed by Trammell Crow Company after the company purchased 3 lots in 2017. Tripp was a brownfield when we purchased it in 2007 and has since transformed into a job center and natural resource area. And finally, something I'm very proud of, if you have a chance, you're encouraged to take a walk through our atrium, where we're featuring a history walk that takes you through a timeline of Oregon and U.S. racial and immigration history. The interactive exhibit will be up through the month of November and is designed to help us look back in order to move forward in support of racial and cultural diversity and equity. So, Madam President, those are my comments this morning.
Thank you, Curtis. I'll take a motion and second to accept the executive director's report.
So moved.
All in favor?
Aye.
Any opposed? Thank you. I think we have someone signed up for a public comment, generally.
Public comment? No.
Okay. So, Dan, I'll ask you to introduce the first general discussion item, please.
Thank you, Madam President. Good morning. Each year, as you likely know, the port is required under state statute, bond ordinances, and federal guidance in connection with such things as various grants and facility charges to have audits performed on our books and records. We're here today to present to you the results of these audits for the fiscal year that ended June 30th, 2018. We're joined by Bob Burkett, the Port's Controller, and Ashley Austin, Senior Manager with Moss Adams. Bob and Ashley will review the 2018 financial results and the results of Moss Adams audits. But before they start, I'd just like to comment that our team has been very pleased with Moss Adams' performance in their second year as the Port's external auditors. We've appreciated their professionalism and the governmental auditing expertise they bring to this engagement. And I think it's fair to say that in general, the audit went very well. Bob and his team are grateful for that. With that, I'll turn it over to Bob and then to Ashley.
As Ian said, we're today to review Port's annual audit reports, an overview of our 2018 results.
You didn't turn your mic on, Bob?
The green? Oh, there we go. The green needs to be brighter. So we're here today to present to you the Port's annual audit reports, give you an overview of our fiscal 2018 results, and for our external auditors to present to you their reports and required communications for the audits that they performed. These reports are the results of months of behind-the-scene work, and I'd just like to acknowledge the efforts of the accounting group, internal audit, finance, risk, payroll, purchasing, and everybody else that supported us with all their hard work. If it was not for their efforts, we wouldn't be here with a report today. So you've received a stack of reports from us. Those include the blue cover audited financial statements. This is the report on the Port's financial performance for the fiscal year fiscal year 2018. We've got the port's report on federal awards regarding federal funding compliance. That's required for entities like the port who receive significant federal funding. And finally, you have the report on passenger facility charges as required by the Federal Aviation Administration. The FAA requires an annual audit for each airport that assesses a PFC. In addition, you've got some copies of the representation letters that we provided to Moss Adams. And while each of these reports serves a different purpose, all of the reports include the port's basic financial statements, which summarize the results of the fiscal year and the port's financial position as of June 30. I'll take a few minutes to briefly review each of the reports, and then I'll hand the presentation over to Moss. So we start with the airport. This is income statement data for PDX and compares revenues and expense data from fiscal 2017 to fiscal 2018. And you can see from the bottom line there, this was another good year for PDX. Our operating revenues on the first line, they increased by nearly $10 million from the prior year. This was due to higher airline revenues, higher concessions revenues, and also the higher transportation network company revenues, that's Uber and Lyft and such. The increases are driven largely by passenger counts. We had nearly 19.5 million passengers go through the airport last year. It's up 3.4% versus the prior year. On the next line, operating expenses, they remained relatively flat year over year. We have a slight increase of $2 million in fiscal 18, due primarily to higher outside services costs offset by lower allocated support or internal overhead costs. The third line is simply the mathematical result of adding the first two. Fourth line, depreciation expense, we're up a little over $7 million for depreciation as more assets have come online and been placed in service. The two big ones for the year would be the new QTA as well as our Taxiway B rehab project that was placed into service. Fifth line, or second to last line, non-operating income. We're up nearly $9 million in fiscal 18. That's as a result of higher capitalized interest, which is an accounting adjustment that reduces interest expense cost. And also there were some one-time costs in fiscal 17 related to demolition costs that were performed by tenants on our behalf. So on the last line, you can see the net income that results from combining all of these results together. So now on the bottom half of the slide, we've added some June 30 balance sheet information. You've got the balances for our assets, liabilities, and net position. Net position is simply the mathematical difference between assets and liabilities, and you'll often hear it called equity in the private sector. You can see that our assets increased, our liabilities decreased, and therefore the net position increased by $63 million during the year. That's primarily made up of the net income that you can see at the top of the slide, plus capital grants that we received during the year. For more discussion of the fiscal 18 performance, I'd point you to the management's discussion and analysis section at the front of any one of these three reports. I'll also note that coming up in the future, we're going to expect to see a little bit lower net income in the future. We have a new Governmental Accounting Standards Board pronouncement that is going to do away with capitalized interest, which will increase the interest expense we record. And we also will likely see higher depreciation expense as more assets come online during this period of capital expansion at the airport. So now we'll move on to the general fund. This is high-level income statement data for the general fund. You'll see it's labeled as marine and other in the reports that we've given you. First line, fiscal 18 operating revenues dropped pretty dramatically in fiscal 18 versus fiscal 17. This was primarily due to two things that really bolstered our performance in fiscal 17. First was land sales. They were about $30 million higher than in fiscal 18. And second was the one-time termination payment that we got out at Terminal 6 when the container terminal lease was terminated. Second line, operating expenses excluding depreciation, we increased slightly from $70.9 million to $73.8 million due to higher Portland Harbor environmental expense accruals, as well as higher longshore labor expenses related to the new operations out at T6 this year. Those were partially offset by the higher cost of property sold expense that we had in fiscal 17 as a result of those higher property sales. Down on the fourth line, our depreciation expense went up about $1.8 million. Again, this was due primarily to new assets coming online. The big assets that came online in the general fund during the year were the T4 birth maintenance project, or birth rehab project, and new auto staging facility out at Terminal 6. Second to last line, non-operating income. We're up about $8 million in fiscal 18, primarily due to the receipt of an environmental insurance buyout payment that had been held up for a number of years in the British bankruptcy courts. This was related to something that started a number of years ago, but it's been held up in receivership, and we finally received it. So the net result of all of these items was a fiscal 18 net loss of $14.1 million for the general fund. Because of the large year-over-year change, I wanted to go back and kind of reconcile and figure out what were the differences. And those primarily are the ICTSI rent and termination payment, land sales, and then our environmental expense and settlement that we received. If you take those items out, fiscal 18 was about $1.7 million worse than fiscal 17. Now, while that helps to analyze and explain the difference, it does not change the bottom line results. So here's balance sheet information for the general fund, and you can see that our assets went down, our liabilities went down. Assets went down about $12 million more than liabilities, so we had an overall decrease in the general fund's net position of about $12 million on the year. That's primarily the negative net income that you see up top, offset by some capital grants that we received during the year. So now we'll move on to the report on federal awards. The first portion of the report includes the same information that are in the audited financial statements, but the additional focus of this report is on federal funding and the testing of internal control over financial reporting and compliance. This slide recaps some information that you'll see starting on page 42 of that report regarding expenditures of federal awards. So you can see that our federal awards in total were pretty consistent from fiscal 17 to 18. The three lines under details show primarily where we receive our federal awards. Variances in grant funding year over year are primarily a function of how many grant eligible costs we incur. For the FAA Airport Improvement Program, you see we had almost $1 million more in eligible funding, and that funds airport capital improvements, Homeland Security, the Transportation Security Administration grants, pretty modest, but they help to fund law enforcement and canine programs at PDX. And the last line, U.S. Army Corps of Engineers dredging, that's our reimbursable contract for maintenance dredging of the river channel. While it's not technically a grant, it counts as federal funding for the purposes of this report. Level of maintenance dredging that we perform is really driven by the demands of the Corps of Engineers and the federal funding that they obtain each year. Last slide. The last report we've given to you is the passenger facility charge report, which we generally refer to passenger facility charges as PFCs. That's that $4.50 per charge or per ticket charge assessed on in-plane passengers, gets collected by the airlines and ultimately remitted to the airports. And we can spend that on FAA-approved projects. Those projects have to enhance safety, security, capacity, reduce noise, or enhance airline competition at airports. So again, the report starts with much of the same information as the other two, and starting on page 42, you get to see information specific to the PFC program, including Moss Adams' report on compliance and internal control over compliance related to the FAA's PFC program. So on this slide, you can see that we collected about 1.7 million more in PFCs during the year. That's primarily driven by the higher enplanements. Our interest earned on that money was up about $400,000 due to higher cash balances and higher interest rates. And our PFC expenditures were pretty flat year over year, and that's because for both years, PFCs were spent to make scheduled debt service payments on PFC revenue bonds that funded past airport capital improvements. We'll expect to see this number go up in the future because we've received permission from the FAA to spend PFC monies on terminal balancing. So with that, I will take a breath and give you an opportunity to ask any questions you might have before I turn it over to Moss Adams.
First of all, thank you for that. And, I think whenever you see the parentheses, it gets your attention, and not where we want to be. But I do think on the operating income side, I think it would be helpful to asterisk property sales so we can exclude one-time variables from our performance as an entity. And I think I know you explained them, but I think it would be helpful to see those. And maybe, Dan, this is something we do in more detailed spreadsheets. But I think just knowing if it's a property sale, I think what we want to gauge is how are we performing and financially, and knowing that we have capital outlays on things, but excluding one-time sales and variables, anomalies, I think would be helpful in terms of just gauging our performance. So I think asterisk on that, and we still have a paren around it, which is not where we want to be, but it's just helpful to break it out, I think.
That's very prophetic of you because you will be seeing new reporting coming your way, which will help to call out some of those items that you just called out. So.
Yeah, I would echo the same sentiment, and I think in looking at the parentheses, it raises concern, but I'm sure that within that information, some of that was foreseeable and predictable. And it would be interesting as we look at budgets to get a sense of where we're going to have what I would call investment years around some of our lines of business, because you'd love to see that looking forward as opposed to viewing it through the rearview mirror. And it is indicative, I think, of some of the challenges and opportunities that the port will face in sort of re-engineering some of the lines of business. So a forward view would be helpful. And there are things that certainly happen that are to the good as well, which are sort of opportunistic, but those are a little harder to predict. I think some of the challenges we have a clearer line of sight on.
Yeah, and this is a report that captures what's happened in the past. But if we were to delve deeper into some of the financial statements, we would see that we have positive cash flow from operations in the general fund, and that if you back out non-cash expenses, you don't have that big negative anymore. So in part, this is the strict accounting rules and does not necessarily answer all financial questions.
Oh, no, it did. And some of it is going to be reminding us of what you've already told us, which would be helpful as well.
Great, thank you.
Just in follow-up on that, I think also, the change in accounting rules is going to be consequential going forward, I think, for everybody in terms of depreciation, capitalization, et cetera. I think it's also want to be noted. I think everybody is seeing that as the tax legislation went through, and how different changes are in there. But just a good notation, I think, just some is how we account for performance, and then really just for us, just trying to gauge where we need to pull levers to change things. What, and Michael, to your point, what's investment, and then just what's change in accounting, I think is just good for transparency. But I think we get it, but I think it's just good so that others can see where it is a rule change versus a performance change.
Again, though you have not been through this before here at the port, you are rather prophetic, and Ashley will be reviewing some of those new accounting pronouncements for you.
Bob, if I can, just so you've heard it from me, Commissioner, we're spending a lot of time the last couple of years. We've been working a lot on the general fund side, essentially to get our cash flows positive, so that on the operating side, our marine and industrial business can stand on its own 2 feet. And it has not been a great 10 or so years, honestly. I think to the point Commissioner Alexander made, you're going to have some ups and downs, and if you're doing that in a strategic way where you're making a strategic investment, absolutely you're going to see that low first, but you expect it to come back up. And we want to get ourselves in a position where we're sustainable so that we can make those smart, long-term, structural, strategic decisions. We're not quite there yet, but that's part of what we're trying to do, both on the cost side and the new business side. So it is a journey. We're getting closer. We're not quite there yet, but the team is pushing hard to get us there.
Thank you. So as Dan mentioned, this is the second year under the new Moss Adams audit contract. Pleased to report Moss did an excellent job. They performed their audits in a way to minimize staff impacts, and most importantly, they issued timely reports. With us here today to present their report and required communications is Ashley Austin, the Senior Manager on the audit.
All right, thank you, Bob. Thank you, commissioners, for having me today. Jim sends his regrets for not being here. He's in New York at the Governmental Accounting Advisory Council meeting, the GASAC meeting, so he can't be here today. He was pretty sad that he had to miss it, but I will stand in his place. There was a presentation that was handed out ahead of this, so I'll go ahead and walk through the presentation, but please stop me at any time if you have any questions. Okay, so the agenda, we'll go over our auditor opinions and reports. Bob did a really nice summary of all the different reports that we issue, but I'll go into a little bit more detail. We'll also talk about audit areas of emphasis. We'll go through our required communication with those charged with governance, which is this group, and then we'll go through a few other elements of other information, which is really just an accounting update. So the most important thing is that we issued a clean opinion on your auditor, on your financial statement. So that's the highest level of assurance that auditors can provide. And that just essentially says that your financial statements are fairly stated in accordance with generally accepted accounting principles. So kudos to you. On to the next slide, the other auditor reports for the single audit. As Bob mentioned, we do issue 2 separate reports because you receive federal funding and expend federal funding greater than $750,000. We issued 1 report on internal control over financial reporting and compliance, no financial reporting findings and no compliance findings there. And then we also issued a report on the compliance with requirements that could have a direct and material impact on the major program that we tested, which was the core contract for dredging, and there were no deficiencies identified and no compliance findings there either. We issue similar reports for the passenger facility charges. The first is, again, a report on internal control over financial reporting and on compliance. No financial reporting findings and no compliance findings identified. And then we also issue a report separately on compliance with requirements applicable just to the PFCs, and no internal control findings and no compliance findings there. Finally, because you are a municipal corporation in Oregon, you are also subject to Oregon minimum standards, which is really due to local budget law and contracting. You're subject to additional requirements. So we issue a separate report on your compliance and on internal control over those specific requirements. We had no control findings, but as you may have seen in the financial statement notes, there was 1 over expenditure identified. Disclosed in the financial statements, very common for clients to have over expenditures, and because they were very transparent in disclosing it, it's usually not a big deal. But it was, what happened was management made an accrual for an environmental liability after the budget appropriations had been made. Again, it's not significant to us, we just are required to report it. I just want to pause there. That's really our auditor opinions and reports. That's the only thing that Moss Adams owns in the financial statements. All this hard work that management does is they own the financial statements. So just to receive all of these clean opinions speaks volumes to the amount of work and just the diligence of management. So I want to thank them for their hard work and their diligence on the financial statements. They really take great care in the financial statement process, and we really appreciate working with them. So moving on to the audit areas of audit emphasis, we spent 6 weeks here at the port doing final field work. So we had a lot of time to do a lot of testing, and management will attest to the fact that we were here for 6 long weeks. We did identify areas of significant audit risk, previous to when we were here, and there were no changes to those risk areas identified. And so this is just an opportunity to tell you what we did. So on slide 9, it really walks through all of the various areas that we spent time on, including internal controls, management estimates. We looked at the net pension liability, bond activity, capital assets, revenue recognition, and net position. I won't go in.
Would you just forward the slides, Bob? Or is
we don't have it electronically, but next year I do apologize. I do apologize. We didn't bring it with us, but next year I will bring it with me.
Thank you.
I won't go through all of the various areas, but do know that we spent a lot of time on each of these areas to make sure that each thing was reported correctly and accurately and consistently with the prior year. And then if you move over to slide 10, we also had separate to our core financial statement team, we also had an information technology team come out and look at change management controls, security and access. No significant issues identified as a result of those procedures. As Bob alluded to, the single audit, we did perform procedures over the dredging contract, which that's really, a deeper dive into the internal controls and on compliance related to those specific requirements of the contract. And to come out of that testing without any significant issues or findings identified is pretty great. We are required to perform an unpredictable procedure each year. This is really designed to keep management on their toes so that we're not asking for the same thing every year. We did merge the employee listing with the vendor listing this year just to review any unusual activity or any unusual trends. Nothing was identified that needs to be discussed here. And then as planned, we did use internal audit as part of our team. They were an integral part, and they were really great to work with. So I'll move on to our required communications with those charged with governance. On to slide 12. Our responsibility under U.S. generally accepted auditing standards and government auditing standards is really just to issue an opinion on the financial statements about whether they're prepared in accordance with U.S. generally accepted accounting principles. We do design the audit to obtain reasonable, not absolute assurance, so we do not audit every dollar, although sometimes it might feel like it. We do consider internal control over financial reporting, but we don't opine on it. So all of those reports on internal control, we're not opining on internal control, but if we had significant findings, we would disclose those in those reports. And then we're required to communicate findings that in our judgment are relevant to your governance as a group. On the plan, scope, and timing of the audit, we did meet with the commission officers back in June. This is our opportunity to tell you if there were any changes to our plan, scope, and timing. This would be if the timing had to shift, if management wasn't ready. There were no changes to our plan, scope, and timing this year. Significant accounting policies and unusual transactions. So management has the responsibility to select the appropriate accounting policies. We're required to tell you if they adopted any new accounting policies this year. Of course, as a result of the adoption of GASB 75, which is accounting and financial reporting for post-employment benefits other than pensions, they did record an adjustment and change their accounting policy for that. Just as an FYI, that's for retirees under the PERS or the OPSRP plan that they can make a one-time election upon retirement to stay on the port's healthcare coverage. So there's an implicit subsidy there because they're paying essentially a lower rate than what they would pay in the market. We looked at the adoption of their standard, the various adjustments and disclosures that were added to the financial statements and deemed them reasonable and appropriate. No other changes to significant accounting policies, and we believe that the policies that management has selected are consistent and appropriate with their organization. Slide 15 really alludes to the fact that management has a lot of judgments and estimates in the financial statements. I didn't discuss it in detail, but we did look at a lot of management's estimates, depreciable lives, the environmental liability, things of that nature that are strictly management estimates that we really scrutinize as part of our audit procedures and really determine if they're consistent or biased. And we reviewed all of those significant management estimates as part of our audit procedures and didn't identify any bias or any significant things that need to be disclosed here. This next slide really talks about disclosures. Bob alluded to this really great document. You have 3 documents which do have similar things in them, but it can be a long read. So if you only focus on specific parts of the financial statement disclosures. We'd focus you to these specific notes as we think they're the most significant to the financial statement user, which would be the summary of significant accounting policies. That's how the port accounts for everything in the financial statements. Long-term debt, because you do have a lot of bonds and compliance and associated things related to your debt, so would draw your attention to that. Pension plans and deferred compensation plan, the post-employment healthcare benefits, of course, because that was a big standard that was implemented this year, and then commitments and contingencies, which talks a lot about your legal contingencies, general legal contingencies, and then just your environmental remediation liabilities. On to slide 17, difficulties encountered in performing the audit. Of course, there were none. This would be our opportunity to tell you if management didn't provide us with documentation that we had asked for, if they didn't provide us access with individuals that we wanted to meet with. Nothing of that nature occurred. On to slide 18. So this is significant audit adjustments, either proposed and then passed on by management or adjusted by management. So no adjusting journal entries were identified. So there were no adjustments that were identified that were material that had to be posted to the financial statements in order for the financial statements to be fairly stated in accordance with GAAP. There was one proposed adjustment identified, which was recorded in the amount of about $4 million to increase land held for sale and net position on the port's financial statements. Really, this is due to a difference in GAAP versus the port's methodology. However, it's a past adjustment because A, it's not material, and B, it will even out over time. It is a timing difference. Once all those tracts of land sell, that difference will be eliminated. So you might see this going forward if it does rise above our findings threshold, which are judgmentally based and evaluated every single year. So it could show up again next year just as those tracts of land continue to be held and sold. On to slide 19. As you know, the port is subject to potential legal proceedings. You do disclose that fact in the financial statements. We confirm with all of your legal representatives as part of our audit procedures and deem the general disclosure sufficient. On to slide 20, this would be our opportunity to tell you if we had any disagreements with management about an accounting treatment of an item. No disagreements this year. Deficiencies in internal control, again, just another opportunity to tell you that not very often are there clients of your size that have no material weaknesses and no significant deficiencies in non-compliance. None of those items were identified. So a material weakness would be a weakness in internal control that would cause a material misstatement in the financial statements. Generally, that's when we identify a material adjustment and internal controls did not catch it. Significant deficiency is a little bit judgmental based, but it's something that could be significant to the financial statements in general that was missed through your internal controls. And then, of course, non-compliance relates to the compliance with the PFCs, compliance with the single audit. So none of those items were noted. So again, kudos to management. Consultation with other accountants. This would be our opportunity to tell you if we were aware if management went out and got a second opinion on an accounting matter, those CPAs would be required to call us to make sure they had all the facts and circumstances. None of those consultations occurred this year that we're aware of. Other material written communications other than the contract, AUP stands for Agreed Upon Procedures Engagement Letter, which we're working on finalizing, the Management Representation Letter, which you have available to you, and the Management Letter. There have been no other significant communications with management. We are also required to consider whether or not the port can continue as a going concern. Management is also required to do this analysis on an annual basis. Based on the numbers that were put up before you, we clearly did not have any concerns. Management did help us in providing some analysis and just their general assessment, but we don't spend a ton of time on it. And then fraud and noncompliance with laws and regulations. We weren't aware of any instances of fraud or noncompliance with laws and regulations as a result of our audit procedures. So that concludes the required communications with your group. I'll just quickly highlight a couple of items on these next two slides, which the GASB doesn't sleep much, it seems like. They are constantly working. So we have a lot of standards that are coming down the pipe too, which I think are pretty significant to the port in general. The first is GASB 87 leases. As you know, this is kind of a copy of the FASB. The private sector did issue a leasing standard that is bringing all operating leases onto the balance sheet. It is very similar to that, not exact, but very similar. So you will be bringing most operating leases that you currently hold onto the balance sheet. Regulated leases, which are your leases with your airlines, are scoped out of the standard. Those are called regulated leases. But more information to come. Management is very on top of the standard. Moss Adams will be providing a webinar later in December surrounding GASB 87. So just we will be working with management as this becomes, as they need to implement it and work with them on that. The other item that's significant is on the next slide, the accounting for interest cost incurred, which is effective for the port's 2021 year end, which essentially eliminates the ability to capitalize interest on construction that's occurring that is funded by debt. Those are the only two items that I was going to mention on that slide. Of course, I can take any questions. And then our contact information for Jim, myself, and then Rachel, who is the audit manager who was out here the majority of field work as well. She's also available if you have any questions.
Thank you. Any questions for Moss Adams? I just want to say, Bob, to you and your team, appreciate all of the hard work. I know this is a ton of work. As somebody who's privileged to stand on the sidelines of these audits in my own organization, I know how much hard work goes into preparing for them and also maintaining controls throughout the year so that we can get these kinds of results. I appreciate that you're meeting both legal obligations and financial ones, as well as providing transparency to the community in what we do. And I think that's really great. So thank you for that.
I'll just chime on to those comments in that this is the equivalent of your physical exam, and it's nice to know that the transparency and the audit comes back and nice work on the report, Ashley. I think it's just as a quasi-public entity, I think it's even more important that we have diligence on the auditing and the clarity of it, and to know where we're off track, if at all. And it's just nice to see the report, and it reflects the really a lot of hard work behind the scenes to make it all happen and to assure transparency and no disagreements with management. I mean, that's just like, I'll figure out something to disagree with you on first. Anyway, nicely done.
Thank you very much.
Thank you.
We'll ask Bobby Stedman to introduce the next two general discussion items.
Yep, thank you. The port is committed to increasing business participation from and jobs for underserved communities. And as such, since 2009, we have set race and gender conscious goals for work awarded through the competitive bid process. And this includes targets for CMGC contracts, as well as professional services and trade services. However, as a recipient of federal funds, the port must have evidence that disparity actually exists between the availability of contractors who are ready, willing, and able to perform the work on contracts, and the actual utilization of these contractors for port contracts before it can set those race and gender conscious goals. These studies typically occur every 10 years. So today, we're here to present the findings of the second port-sponsored disparity study conducted by Collette Holt and Associates. Ms. Holt is a nationally recognized attorney and expert in the field, and she will be providing an overview of the process used, some of the findings, and the program recommendations. Kimberly Mitchell-Phillips, the Port Small Business Program Manager, will join Ms. Holt to provide the proposed action plan and timeline for the disparity study. Kimberly will also follow up with that presentation with a report of the accomplishments of the Small Business Program for the federal fiscal year 2018.
Right. Good morning, everyone. Well, good morning, everyone. Thank you so much for having me and for allowing me to have a few minutes to present the results of the Disparity study. I'm Colette Holt. I was the program manager and the head of the firm that performed the study. I'm always delighted to come to Portland. I'm actually Oakland and Chicago based because the airport was actually one of my very first clients. Back in the 90s, when Rhonda Edmiston was here, and I think it was 1995, was the first time I did work for you all. So it's been a long relationship that I valued and treasured, and we were very honored to be chosen to conduct the disparity study for you. I also want to thank the staff, of course, Kimberly in particular, Bobby, everyone was really extraordinarily cooperative with us. And while you might think that that's a given, I can assure you, having done this for 25 years, that it is not. And people here were responsive. They got back to us quickly. They answered our questions. They were always kind and professional and polite. And we really did enjoy this project. So thanks for the opportunity to do it. So let me see. I guess we push this one. No, wrong one.
Left button.
Left button. This one. Okay. I'm a Mac girl. We don't have different things, right? Okay. So let me start by talking a little bit about the disparity study objectives. In some ways, first and foremost, is to provide you a defense if you were to be sued. As I'm sure most of you are well aware, there are challenges to these programs. There is an awful lot of hostility, which seems to be, quite frankly, rising towards efforts to be inclusive and fair towards women and minorities and women and minority-owned firms. So it's important that the port receive a document that we feel confident that we could go to federal court with. And while you never know what a federal judge might do, we certainly know that we are well within the accepted standards. And I'm happy to say that I have not lost a case yet, and I don't intend to start with you. So we think we are on very good legal ground for the work that we did. Also important objective is to meet the FAA's requirements. And as you know, the FAA has 49 CFR Part 26, which governs the DBE program, and then Part 23, which governs the concessions program. And they have put out a lot of guidance and other information, as well as the regulatory language itself, about how to meet the requirements, both from a compliance standpoint, as well as meeting the legal requirements as described by the General Counsel's Office at USDOT. We also wanted to be sure that we were able to provide you with in a sense, customer feedback about how your program is doing, and then working with Kimberly and the port once this process has been completed in developing and assisting you with advice about implementing any recommendations and how you might need to, if you do, defend your initiatives. And last but not least is we want the document to educate policymakers, officials such as yourselves, as well as the public, about what the standards are, what evidence we gathered, what findings we made, and how the study fits within that. We really do try our best to write the study in halfway plain English. Just know a disparity study is the child of lawyers and economists, and that's really a bad start. But we try to at least put it into language that everyone can understand, especially in the executive summary. But if you are a data nerd, we have lots and lots and lots of tables for you that should make you happy should you want to read all of that. It's all there, but we did try to summarize it in a way that's accessible to everyone. So here are the elements of the study. We start with the legal analysis so that you, and particularly a court, will be able to see how we think the methodology that we used and the data we developed fit within the accepted legal standards and social science principles. We also reviewed your programs, your DBE program, ACDBE program, and what's now called the Small Business Program, which I appreciated because before it had a really, really long acronym that it was easy to stumble over. And we wanted to give you some ideas about that, as well as ask business owners and your staff about how that's going for them and get their suggestions and recommendations about what might be done going forward. Turning to the statistical or contract utilization section, we then develop contract data for the port on your utilization of women and minority-owned firms, compared to their availability. And we've got a couple slides in a minute that show you what those results were. And this was really where the port staff's cooperation with us and responsiveness to us was very important. You are now implementing the B2G system going forward, but the early years of data in the study, that was not the case. And so we had to go back and fill in and validate your contract records, especially challenging for subcontractors or subconsultants that are not certified as DBEs or SBEs. Agencies typically don't collect that information because you otherwise really don't have much need for it. So we had to go do that, and port folks were greatly helpful to us in doing that. Once we got your contract data in, as per the regulations and the case law, we then developed the scope of your geographic market. Both 49 CFR Part 26 and 23 and the case law, at least out in this circuit, suggests that you need to limit the reach of your program to the geographic market in which you operate. When I get to car rentals, we can have a conversation about, that's really a national market, but for things like construction, it is a more limited market than the entire world, and certainly the United States. So that was an important element. We also had to develop your industry markets, which means what do you spend your money on? You're an airport. That means you don't buy everything out there in the marketplace. And one thing that many disparity studies have been faulted for is just sort of tossing everything in there and not weighting it and saying, well, runway lighting is very important to you. You spend a lot of money on paving, but you don't spend so much money on some other things. So it was important to get that right. Once we did that and we figured out where you spent your money and what you spent it on, then we were able to develop your utilization data, which is who did you spend it with? Who were the minority and women-owned firms as a percentage of all firms that were out there in the market that you contracted with, both as prime vendors and contractors, as well as subcontractors and suppliers. Once we got your utilization data, we turned to who was available to do the type of work that you, in fact, engage in. And as you'll see in some slides and when you see the report, we've got lots of information on who was available. It's disaggregated by race and by gender, as well as at the 6-digit industry code level. For purposes this morning, I thought rather than have you all just die from boredom, we rolled it all up into one number, but it is all disaggregated in the study if you'd like to see that. Once we figured out who you used and then who was available, who could have been used, we compare those. And if there is a quote-unquote disparity between them, that's information that FAA and the courts look to whether or not you need to continue to use contract goals to meet your overall objectives, both on your FAA-funded contracts, your concession contracts, and on your locally funded contracts. And finally, we did provide anecdotal information. Anecdotal information standing alone will not be sufficient to support a program, but harkening back, I've been out of law school a long time, to Justice Lewis Powell, for those of you who remember him, who said that anecdotal information gives life to cold statistics. So we went to talk to real life people about what was going on, and were they able to get work? What types of barriers did they face in the marketplace? How were they treated? We also talked to prime contractors, general contractors who are not DBEs, to make sure we got everybody's side of the story, so to speak. And that we were able to get input from everyone so that our recommendations are informed by participation from all the groups. So here's what we found. Those were our elements and what we did, and here's what we came up with. We analyzed contracts for federal fiscal years 2012 through 2016. This is a pretty good, broad, in-depth look. You want to make sure that you don't get some anomalies that happen because you had one huge project this year and nothing the next year. So that should give you a good, smoothed out look at what you did. We looked at 1,130 FAA-funded and non-FAA-funded contracts. For a total of about $407 million worth of spend. We looked at 90 concession contracts. One of the things that's interesting about the port compared to other airports is that you have a lot more direct contracting with many of the smaller concessionaires. To your credit, and you'll see that really pays off in their ability to do work for you. And those totaled about $1.3 billion in actual dollars received. For your FAA-funded contracts, we found that disadvantaged businesses received about 18% of your contract dollars. Now, this is for all sectors combined. What I mean by that is this is construction-related services. There's very little outside of that that's FAA funded, but to the extent it was there, that we looked at that. So you'll see in the study all of that's disaggregated if you'd like to examine that in more depth. This was compared to about 13% in firms that were available. So my sort of shorthand colloquial take on this is you're knocking it out of the park on this. People clearly are being used here, they're getting opportunities here, then they are being included. And you are to be lauded for that because it's not always so easy in an airport. Your work is very specialized and it takes a lot of money and skill to do work out here. Note that that number is to some extent driven by a couple of DBEs that were able to get very large contracts and who've been able to break that barrier, that ceiling about being able to do runway work. And I'm happy to say I was able to pass some of their names on to people that are doing work at DFW and Houston Airport. So, trying to get work for your firms everywhere that they can. On your non-FAA funded contracts, kind of a flip. We saw utilization of 13.5%, give or take, but the availability was higher. And that's because your non-FAA funded contracts tend to be things more like maintenance, where there are more minority and women firms that are going to be available. The contracting requirements are not so high. You don't need as much bonding. You don't need as much financing. So there are more minority and women-owned firms that can do that type of work than FAA-funded contracts. And you see there what your utilization turned out to be. On your concession contracts for car rentals, we found very low ACDBE, that's airport concession, disadvantaged business enterprises, utilization compared to some availability. Let me just say this about car rentals. The regs haven't really changed since the 90s on car rentals, and it continues to be, as I'm sure you know better than I, a continuing consolidated industry. I think, what are we down now to, like 3 major car rental companies? They got different names, but I guess Avis owns Budget now and Enterprise owns somebody else. And so we've been begging the FAA, and I know Kimberly's been very involved in AMAC as well. We've been begging the FAA for over a decade to give us a national car rental goal. Because to suggest that somehow that these are sub-markets, I just think it's not real. And I say that as somebody who flies 200,000 miles a year. I spend a lot of money with car rental companies, and they're all the same. You go to the website. It really is not some kind of local market. But we're stuck with the regs as they are. And you can see here how you did. This is about what I see everywhere across the country, so no surprise. On non-car rental concessions, however, knocking out of the park doesn't describe it. You're doing great there. You've got fantastic ACDBE utilization. I don't know that I've seen it any higher any place ever. And then you see the availability there. So you're doing wonderfully well there. And you'll see in a second when I get to the comments from your ACDBEs, people really like working with this airport. And even people who I know because I've interviewed them for other studies at other airports, we're not nearly so complimentary. So that's your utilization and availability information. We also took a look at 2 very large census databases to give us an idea of what's happening in the overall Portland area economy. This has been very important in our ability to defend programs because to some extent you become the victims of your own success. You're running a great program with like truly skeleton staff. So just now, one of the things that we certainly are going to urge you is a 2-person office for an airport of this size and complexity. I don't know how they do it. It's a miracle in my view. I mean, I've got clients that are water districts that have 8 or 9 people running their programs. So this is true shoestring, and they're doing a fabulous job. So we wanted to see what was going on out in the wider economy where these types of programs really are not prevalent at all. There are some, Microsoft, Boeing, but overall there's very little affirmative action in the overall economy. And this has been important. Courts have looked to this type of information and asking the question whether if you were to stop implementing your program and stop setting goals, what would happen? And what we see across the country, no surprise here, is that women and minority-owned firms are not getting anything close to parity in the overall market, and they are not starting firms at the same rate as comparable white males. And when they do, their firm earnings fall far short of comparable white males. So we've used this type of evidence to suggest to judges that, yes, the agency is doing really great, but it's the result of the program, not because racial and gender barriers have magically disappeared in Portland. We also took a look at some credit discrimination literature out there that shows that minority-owned firms in particular, especially black-owned firms, continue to face a lot of discrimination in the market for business capital, as well as human constraints, access to education, those types of things, continue to dampen opportunities for women and minority firms, especially minority-owned firms. So that's your quantitative information. Turning to the qualitative information, we used two instruments to get anecdotal data. The first were a series of small group interviews with minority and women-owned firms, as well as majority and publicly traded firms. And then we also sent out a survey, an electronic survey, and asked people to give us additional information from that. So you see here what we found. Certainly in the interviews, minority and women firms reported that perceptions about their competency, their ability to access networks, those types of things that are critical for entrepreneurial success continue to be barriers to their ability to do work for you. Women in particular reported sexism and unconscious bias limit their opportunities. All the way from women in architecture who felt that they weren't given the same opportunities to women in construction who report harassment and other issues on the job site. One thing that's interesting to me as a researcher who's been doing this for a very long time is that the Me Too movement has actually caused women to be much more forthcoming with me than they tended to be in the past. They have to kind of drag stuff out of people, or worse, the tape would be off and then they'd start telling me stuff. Now I find that people are more open and everyone seems to be more willing to talk about these issues, and that's a great development. They did find that everybody pretty much reported that being certified increased their opportunities, that was how they got into the port, that they felt welcomed, and that the certification process, while onerous and burdensome, and I can say that as somebody who's been certified in 17 states at one point, they were able to get through it, and they thought that it was fair and made sure that firms were legitimately owned, managed, and controlled by the minority or woman owner. There was almost universal agreement that without contract goals, they would not get opportunities, sort of full stop, that the goals are why the program works. Yes, it was important to have race and gender neutral measures that help all small firms, but most of the DBEs reported that the firms that use them on contracts with goals do not use them when there are not goals. And again, that's what we hear across the country. The survey responses pretty much backed that up. There was some concern about perceived lack of competency that came through in the surveys, that women in minority firms felt like they had to be twice as good and work twice as hard to get half as far, that they were always constantly having to prove themselves over and over again. And so those are the types of barriers that are out there. The port really can't do anything about that, but as long as you continue to run a good, aggressive program, I think that you've been obviously able to mostly overcome those. So turning now to their experiences with your programs, people were generally quite complimentary about the programs. They felt that the port was committed to these outreach and affirmative action programs, that the staff did the best they could. They recognized that Kimberly and her staff are thin, and so they were very complimentary about what the port's been able to do. Professional services firms had some interesting observations in that they would like to have more direct access to port decision makers, to be able to meet with the head of engineering or whatever their skill set is that they're interested in promoting to you and presenting their credentials, that they sometimes felt like they were always going through the big primes, for architects, for engineers, those kinds of folks. They also asked for more specific outreach on particular projects that are coming up. And again, I think this is more of a staffing issue. There are only so many hours in the day. With just two people, you can only cover so much ground. But I think that they would like to know and have outreach events when there's a really big project like a runway renovation or a terminal renovation or something like that coming up. Some folks found the port systems a bit difficult to navigate. I think that there's been actually a lot of progress on that in the last year or so, so take those comments within that context, as well as people who may not have tried to do anything recently and so have a memory about an older system. So I report it, but I don't want people to overblow that. Certainly bonding and financing assistance would be helpful, especially on the construction side. There are big projects here. It's difficult to bond them. Insurance is a huge issue. Of course, it's difficult and dangerous to do work in an airport, especially out on the field. And so some type of program to support that was recommended. Unequivocally, your contract goals remain effective and they are absolutely necessary. That is the way that people get work, and it's the way that you ensure equity. There were some suggestions that when possible, projects should be unbundled. That's kind of the procurement term of art of trying to make them smaller, or they may be larger contracts, but they have fewer scopes attached to them, so less complex, so that smaller firms can, in fact, do the work directly as primes. That's always a real issue, which is getting people into the prime positions, especially on the professional services side. So they aren't always up under somebody, and therefore they get the experience and they get the profit, quite frankly, because there's always more profit to the prime. And so this was one way that you might think about doing that. Same thing with experience and insurance requirements. There was a lot of discussion about the on-call contracts, and many of the DBEs felt that they really were not getting much work. This is a difficult issue for every agency that we work with, because you set it up front, but you don't really know what the work is going to be yet. And so if you are a DBE that's in a scope where the airport didn't call, you're not going to get any work. I mean, that's just how the system functions. People understood that, but they thought that maybe unbundling the contracts would then allow them to be the prime, so they're not the sub on the on-call contract. So it's something maybe I think you want to take a look at and work through. And then some people reported that slow payments were a problem. Let me say, we did not have that problem. We got paid promptly. Kimberly made sure that we got paid. So I am very happy. I cannot say that at all. That was not true for us, but other people did say that. Sometimes some of the small contractors found port materials difficult to obtain, where the specifications have proprietary supplies in them. The DBEs are not a supplier or distributor for that spec'd out product, and therefore they literally cannot compete. So again, that's something I would suggest you take a look at. Most prime contractors were able to meet the goals. Some of them whined about it a bit, but they got there. And they generally reported that the DBEs were competent and qualified and did work, good work. Again, on-call contracts were difficult. One thing that the primes noted, which was a compliment that I want to share with you, which is that the port is reasonable and flexible about allowing a firm to substitute a non-performing certified firm. And they contrasted this with some other agencies that just sort of say, your problem, we don't care, we know they're not performing, too bad for you. But the port definitely did not do that, and I think that's important because you want people to be in the program and not resent it. And if you're a prime and you have a firm that's not performing and you can't do anything about it, that's a problem really for everybody. There was some request that the contract goal setting methodology be made more transparent. One of the things we certainly suggest to you is that you take the disparity study data, we'll provide it in the format that B2G now needs, and you load it in. I've worked quite closely with that firm over the last year or so to develop a goal setting module that agencies can use, where you can literally take the disparity study data, dump it into B2G, and it will help you set your goals. That's more defensible. You're now tied to your study. It's less work for the staff. And so I'm actually really, really happy and proud that we've been able to work with the firm to give that to clients. There was some concern that prime contractors tend to use the same DBEs over and over again, and that it was hard for new firms to break in. The primes said, well, yes, of course, we like to use the people we know can do the work, good work, on time, on budget. And so there's some tension there, but it's something maybe worth taking a look at. Generally speaking, your contract monitoring was effective. There was a lot of support for some type of a small race-neutral set aside. Now, you have that in your program now, but really to enhance that, to take some small contracts and set them aside for bidding just by SBEs. You cannot do it on a race and gender conscious basis. You cannot have a set aside that's just for DBEs. You will have to use your SBE mechanism for that, but FAA I know is happy to work for that with you. And then last, but I think maybe that might be last, but not least, the Mentor Protege program that you've been running here since Rhonda was here. That was the very first thing I ever worked on with the port. Is reported to be an excellent program. People really like it. The primes liked it. The DBEs liked it. There was some thought that it could be enhanced by tying it more to project opportunities, so that people who are in the program will know that they will actually be able to get some work out of participating in it. But we actually had Kimberly present at the American Contract Compliance Association conference this past fall. On your Mentor Protege program. That's the national group that works with contract compliance people. She got rave reviews and people were really interested in your program. So you really are a national model, and it's something you really should be proud of, because it's really a good thing. So turning now to experiences with the ACDBE program, you got a pretty group of happy campers, more or less. They definitely think that you need to continue your goals. Some of the primes reported that it could be a challenge. But the only real suggestion that came out of those meetings was some type of a regular working group of the ACDBEs so they could get to know each other, share issues, and engage in some group problem solving. But otherwise, people really just said that program's doing great, and they loved it. So those are our findings. So let me stop there. I've kind of rattled on for a while here and see if you all have any questions.
Questions? Commissioner?
Yeah, well, first of all, thank you very much. I know this has been a comprehensive effort, and
it's been fun, actually.
We've looked with great anticipation to sort of hearing the path. You have some history with the port, and I'm curious as you sort of look upon that span, have we kept pace with the changing demographics in Oregon? Because this is a very different state than 20 years ago, and I think a part of the concern is that we continue to have the opportunity to engage and to evolve, and to not have this work viewed as disruptive, but complementary and additive. I mean, I'd be interested in your assessment.
Sure, I certainly think so. I mean, I think that's what the data bear out, which is that your utilization of women in minority firms is very, very good. Certainly, when you disaggregate that, you'll see some groups have had better opportunities than others. No, probably big surprise to anybody that blacks are having more problems than anybody else. That's true everywhere across the country in every study I've ever done. Because the challenges are greater in our community. The barriers are higher, and people have fewer resources. But the port, I think, overall is doing really quite well. And especially given the demographics, yes, they've changed, but I mean, I'm really from Chicago. It's not Chicago in terms of who's here and who's available. And one of the things to keep in mind, especially when you're talking to the public, I think, is that the courts require that we look at the business community, not the overall community. So you could have, I'm just going to make this up, you could have a community that was 20% people of color, but the businesses might only be 6 or 7% because of those barriers and people starting firms. But the courts require us to look at the businesses, not the general demographics. And that can be kind of hard to explain to people sometimes because it's not intuitive. They say, well, we're 20% of the people. How come we don't get 20% of the work? That's a perfectly reasonable question in my view. It wasn't a perfectly reasonable question, however, to Sandra Day O'Connor. And I would submit that if it wasn't in 1989, the Roberts, Gorsuch, Kavanaugh court is surely unlikely to give us any relief there. So we really have to stay within that business demographic. And so within that, I think you've absolutely done a fantastic job, and the data bear that out.
Okay. And then a follow-up question, which is more just personal curiosity. Where we have targets and goals set there, and I think some of the subcontractors indicated that there seemed to be greater compliance around meeting them. are there ports or the airports that sort of look at the overall business performance and profiling of large contractors when there are not requirements? I'm curious. It's that question of what do you do when nobody's looking?
Right, sure. Yeah.
And how does that influence your general business practice? Is there something we can sort of glean from that?
Yeah, I think so. I think that's a really, really good point, because the vast majority of work is in the private sector, unless you truly are aviation specialized. But most firms do work outside of airports. So what are you doing, right, when nobody's looking? I think that's a great way to put it. Can I steal that?
Absolutely.
I think one thing you might think about, I've seen some places do this, is when it's negotiated work. Hard bid is you got little to work with there, but if it's negotiated work, construction manager at risk, certainly on the professional services side, I think you are well within your rights to ask, in general, how are you doing on your contracts that don't have goals? And even if you don't actually score that, I think even getting vendors, bidders, proposers to think about that and have to ask themselves some questions. Yeah, we do great on port work, but do we do anything for minority and women-owned firms and work with them outside of port work? Because mostly what you hear from the DBEs is that they don't. And so I think that's an important thing to think about. And I know Kimberly's going to be talking about moving forward. I'm fully committed to working with you. We're not charging you more money. I mean, I want you to have a really good program here, and you do. And I think you could become a leader in asking those kinds of questions, so that firms, especially professional services firms, know that that's important to you. And I can certainly say this, at least for the law firms. We heard from the accountants and whatnot. You're our clients. We want to please you. And if that's of value to you, then we'll pay attention to it. I'm fascinated to see the big law firms now drag what few minority partners they have to all of these sort of beauty contests now, because the clients are asking for it. So if you ask for it and make it of value, they'll listen.
Right. Thank you.
Thank you very much. And maybe we'll get into this in the next part of it, but if there's one thing we could focus on to do better, what would it be?
Get yourself some more staff, because it doesn't matter if there's nobody to execute it. So, I mean, this is a two-woman operation. I continue to just sort of marvel at it, to be honest. So get yourself some more folks. And then you've got people to go on out there. I think certainly some more attention on the professional services side would be useful. I heard loud and clear this issue about speccing out materials that people can't get. So I think there's some places to focus. But if you don't get any more people to execute your plan, then it's a nice plan. But I don't say you can dump any more on top of these people and have them continue to do the excellent work that they are known in the community for doing.
I guess I'll just finish by saying I appreciate all of the work. I know both with the staff and with your help. To know what we're doing well and where we could do better, I think, is important for this body. So thank you.
Right. Okay. You're on. You need the clicker. Okay, I get it. Right now. Does somebody know how to take that one down and put the other one up? Oh, that looks like. Okay.
That's not me.
No, that's not you. It kind of is you, because you're going to have to figure out how to get participation on it, but otherwise it's not really you.
It's all me.
It's always you, right?
So good morning, everybody. I'm Kimberly Mitchell-Phillips, Small Business Program Manager, and I'm going to just update you on how we did for federal fiscal year 18 in regards to our small business programs, as well as provide an overview of the programs that we implement. So the purpose of the Port Small Business Development Program is to enhance opportunities to small businesses in the region through ensuring non-discrimination in contracting, leveling the playing field for small businesses and port opportunities, removing barriers to participation, and assisting in the development for firms to successfully compete in the marketplace. The Port Small Business Development Program is comprised of 4 unique programs that are designed to complement each other, to develop small businesses and provide a gateway to port business opportunities. We have our Disadvantaged Business Enterprise Program, which applies to all federally funded airport improvement projects such as runway improvements. This program is required by the FAA in order to receive those dollars. We have our ACDB program, which is our concessions DB program. Similar to the DB program, it is also specific to airports, but it's just applies to our concessions program and is under CFR 49 Part 23. And then we have our local program, our SBE program, which is applies to all port-funded projects. It is not a federal requirement. It's something the port does voluntarily, and it is comprised of all firms certified by the state's Office of Certification, also called COBID, and so that one is a catch-all race-neutral program. And then last but not least, we have my favorite program, the Port's Mentor Protege program. I love being the architect of that for the last 5 years because I really can delve in and work with the small business community one-on-one. And that one is our nationally recognized Mentor Protege program, which lately has gotten a lot of buzz. I've been asked to speak at a couple of national conferences around it. And so I'm excited to share the good work and how we're doing on that later on. Additional information will be provided on each program on what we've accomplished for the last year. So the Port's Small Business Enterprise Program, which is not a legal requirement, it's something the Port takes an interest in the economic wealth of the region and has made a decision to not only set goals on DBE projects, but also non-federally funded port projects as well. The Port sets project goals on contracts $500,000 or above. We set goals based on the small business availability for the scope of work on the construction projects, and we require that the lowest bidder meet the stated goal or provide documentation that they made every effort possible, also generally known as good faith efforts. Professional services contracts does not have a specific goal. We review RFP solicitation language, which require the proposer to state what small business participation they will achieve on the project, which is scored, and then what their outreach plan and what identified firms they will utilize, which is tracked and monitored through our B2G system. That stated goal becomes the contract goal and is what's monitored throughout the life of the project. So how did we do? So the Port's overall goal is 20%. That's in number of contracts and contract dollars. During FY18, we awarded 16 contracts that fell into the over $500,000 bucket. Of those contracts that were awarded, 3 were awarded directly to small businesses, and then the other 13 were awarded to non-certified prime contractors. Additionally, 54 subcontracts were awarded to certified firms from that pool of 16 contracts, resulting in pretty phenomenal, I think, participation, 27% participation overall, and then 26% in the number of contracts. And what we're seeing is that small businesses are getting larger contracts and fewer in number, but larger in dollar, and that's what that's reflecting. So we're seeing the small businesses being able to strengthen their capacity to participate on our non-federally funded work, and that bidders are meeting the goal instead of piecing it out to smaller contracts to a bunch of small businesses. They're giving a few businesses larger contracts, and that's a double-edged sword because new businesses aren't participating. So we need to work through that, and I have Colette here to help me. Some advice on how to get through that. So it's a double-edged sword of success, but we still need to create a pathway for new small businesses to participate. Our Disadvantaged Business Enterprise Program is comprised of small businesses that are certified as DBE by the state of Oregon. A DBE is a for-profit small business that is at least 51% owned by a minority or women who are both socially and economically disadvantaged. As a recipient of the federal financial assistance from the USDOT, the Port establishes goals for all federally funded procurements. Goals are set utilizing USDOT goal-setting regulations, which require the Port to review each anticipated FAA-funded contract for the next 3 years and determine how many DBEs are available for the type of work that will be contracted, and compares this to the overall number of firms available to perform the work. This analysis provides the port with our 3-year goal and is required to be updated whenever new FAA grants are awarded to the port. So it's a moving target. It's not it can be adjusted. Even though it's a triennial goal, we may adjust it year to year if our grants department is successful in getting us more money, or if a grant falls off the chart. So last year, as you can see, we had 3 different goals for our 3 airports. Last year, the FAA required us to break those out. Prior to that, we were lumped into one goal. So this is new if you're looking for recalling from last year that we had one goal. We now have 3 goals for each airport. And on the chart on the right there is what you're looking at is accumulation of all of those numbers rounded up into one overall DB participation. But the actual commission report does break it down into how we did by airport. As you can see, we are trending down for FY18, and this is due to a runway project at the Hillsborough Airport not getting the DB participation that we anticipated. The project was awarded during FY18, and the bright light on that is the work has not begun yet. So our department is planning on meeting with the prime contractor, who coincidentally is a woman-owned certified firm. She's WBE certified, but not DBE. So there is some money going into the small business community, but it's not that DBE bucket that the FAA requires. So we're going to sit down with them. We have a great relationship and try to identify opportunities to increase that at least up to the Hillsborough goal, which is right now 11.78%, so that we're meeting that. On our airport concession side, we continue to do a great job, so I'm always happy to talk about this program. The ACDB program is a federal requirement under 49 CFR Part 23. The airports receiving federal financial assistance must have an ACDB program for concession opportunities. And so what you're looking at here is our participation, which is broken out between food and retail and then car rental. So the FAA requires us to have 2 different goals, to monitor them separately, and then report them separately as well. So what you're seeing here is that we actually are tracking at 24%. Our goal for food and retail based on availability is 12.9%. That is due to the fact that, first of all, our concessions team is phenomenal. I really love working with Chris Arnecki's group, and all of the concessions development team, because they really do work and think about small business opportunities when new concession opportunities are available, and they're the first to notify me before and get it on my radar early on so we can work together as a team. So really just their willingness to be a part of this is outstanding, and I'm really happy to work with them. Additionally, our ability to continue to do direct negotiations with concessions as opportunities are available have really been instrumental. In particular, we were able to welcome Bangkok Express last year as our newest ACDB tenant. They moved from the food cart. If you guys recall, they were operated in the food cart for about a year, and we did a direct negotiation, and now they have a full-fledged concessions location, pre-security. So those types of willingness on their part to work with our office to be proactive and put a little bit more sweat and elbow grease into getting these opportunities when available has really paid off, and that's what you're seeing there. And then we also knocked it out the park randomly, I'm going to admit, with the car rental. So what you're looking at is we just finished that consolidated rental car, and not the rental car, but the car wash. Thank you. I'm tongue-tied right now. And so what happened was one of our larger car rental companies bought a whole fleet of cars to fill it up, and they bought it from a car rental or car dealership in California that got certified in Oregon before the purchase. So you're seeing a couple $1 million worth of car purchases, which I don't anticipate that to be happening next year. So I do anticipate that will be a one-time anomaly. I don't want anybody to use that as a marker of what should be expected moving forward. Let's see here. Next, we have the Ports Mentor Protege program. So we've had a busy year. So this last year, we onboarded 15 new small businesses, and we graduated out 4 this August. So it's been quite a busy year. The Mentor Protege Program, if you're not familiar, pairs 2 mentors with each protege firm who work together over a 3-year period. The mentor team is comprised of one mentor who has industry-specific knowledge, which complements the small business, and one with a financial background, which can help them to kind of look at their books and see where some struggles are. They work over a 3-year period to create a strategic plan for growth and some kind of high goals of what they want to accomplish. And then the port complements that by providing not only a facilitated meeting space here at PDX, but we also provide technical services such as estimating, bookkeeping, software, marketing, and whatever the specific need is needed to the small business. And we do this, we've had this program in place since 1995. And right now, with our recent cohort graduation, we're up to 114 firms that have participated in the program. So we're pretty excited that people want to be participating in it. We have a good reputation on the street. I'm constantly being asked, probably on a weekly basis, I get an application from a small business in the area who wants to participate, and they're always referred by somebody who graduated. So that is a testament that, it's almost word of mouth at this point. Last year, small protege firms received $1.5 million in port contracts, which is, we want to continue to grow that. So I'm excited to hear about this, maybe looking at how we can tie that into contracts moving forward. And just, overall, side note, I love this program because a lot of times I'm working in data and numbers in the big picture, and this is the opportunity that I'm able to work one-on-one with the small business owners and really just get to know them, and I become kind of emotionally attached to their success. So this is my favorite program. Let's see here. So for 2018, this is what we were doing. We had our disparity study, which just got completed by Colette. You already heard from her update, and we'll go over in the next slide our moving forward action plan. And then we are continuing to monitor our workforce partnership agreement on terminal balancing. The prime contractor is Skanska. As you know, it got a 1-year delay from, we were hoping to have the results by now, but with some hiccups through the process, we had a 1-year delay on the project. So we are a full bore on that. We're doing a great job, I believe, with achieving our equity goals within that. And so we're going to continue to monitor and track that. And then, of course, we have our 2, which are now annual events, our Growing Portland open house, which we just did October 30th at Kennedy School. And we do that one in the community at the Kennedy School. So we do one in the community, and we combine that with Portland Public Schools and Prosper Portland to give the small business more bang for their buck. This one was probably our most successful because we were able to bring in representatives from business lines within the port that typically don't have access to small businesses. In particular, some of those maintenance departments that generally are kind of in a silo, not here in the HQ. So getting the people who are buying goods and services for those groups at that event turned out to be a very successful move that we will continue moving forward. And then in February, we'll have our Contractor Connect. And since it's winter time, we'll have it here at HQ like we did the last couple of years. And that really is it's a Meet the Primes event, getting our top prime contractors in front of small businesses. And it's also an opportunity for them to learn about what projects are coming up. So we'll continue with those events moving forward. Oh, and I'm missing a slide. I apologize, but I will give you a verbal update on our disparity study next steps. So after reviewing the program recommendations provided by Colette Holston Associates, our action plan to move forward is to establish a disparity study task force, which will be comprised of port decision makers as well as community stakeholders, both small business community stakeholders such as NAMAC and AWAMI, as well as large ones like the AGC. And then we will work to create an action plan and timeline in conjunction with guidance provided by Colette Holt and her team. And we hope to have an action plan, our first meeting in January, and develop a timeline and keep you guys updated regularly as far as where we're at with that. We anticipate, depends on what we go. I'm optimistic that we can implement most of these within a year. My fingers are crossed, wish me luck. So, so that's my report. Any questions?
Thanks, Kimberly. We look forward to knowing how you're going to move forward, given the success you've had so far.
Thank you.
Any other questions? Or?
Thank you.
Thank you.
All right. Thanks. Thank you.
I'll ask if any commissioner wants a presentation on the consent item, which is a procurement contract pavement de-icing agent, Portland International Airport. Okay, if hearing none, I will ask for a motion and second for the consent item. All in favor?
Aye.
Any opposed? Thank you. Vince, I'll ask you to come forward and introduce the first two agenda items.
Okay, good morning. We're going to do these two. I'll just do one introduction for the two items, but we'll obviously vote on them individually. So we have two items here that really are connected. And the first one, we've got Eric Forsyth as the project manager here for a project improvement contract amendment to J.E. Dunn for the construction of the Packer project, as we call it, the parking addition and consolidated rental car facility. This is we've been to a couple of times in the past for some of the preliminary enabling work and then some initial design work, and we're here now really to take this contract the rest of the way with J.E. Dunn. We've spent about 2 years on design up to this point. This will keep rental cars here close into the building, to the terminal, which is a big deal from us from a customer service standpoint. And so we're planning on having them here for at least 20 years, close in here in the building. And we think as long as we can possibly do that, it's a big part of the customer service benefit. The other part of this project is to add a little over 2,200 parking spaces. And for those people who tried to park here today, you can see why we need that. And we are just flat out of parking here close into the building. And so we really need those as well. So the other thing that we're doing with J.E. Dunn is we've asked them to deliver the shell and the core of the upper floors of what we're calling the rental car center. And this is a standalone building right next to the Packer facility that you'll see here coming up. First floor will be for the rental car operators and the customers there. Above that, we are moving folks out of the terminal building in preparation for the terminal core project. So police, badging, hopefully the TSA as well. And it just makes sense to have J.E. Dunn complete that work while they're obviously in that area. The terminal core project is funding that part of it. The other contract that you're going to have in front of you then is the rental car agreements. And we've been negotiating with the rental cars for about 2 years as well on this one. These are a little bit different. Normally when we do a concessions, we get different proposals, but the rental cars, certainly they have their own individual operating models, but the contract is relatively consistent. And so what we do is we spend about 2 years, it took in this case about 2 years to negotiate the terms of the deal with the rental car contractors. Now obviously the layout of this project and the rental car facility had a lot to do with that negotiation. So we come to an agreement on what the contract looks like, and then they bid on those, and basically a minimum annual guarantee for that. So with the last contract that we had was 2011. We only have 5 brands on airport, and the off-airport brands use shuttle buses to get along Airport Way and get their passengers here and there. But we'd like to get everybody on board, if at all possible. We think it's a better service. It also gets the buses off the roadway, and so we think it's a much better operation. So these rental car contracts help fund a lot of the cost that's associated with this as well. So I am going to talk just a little bit about funding also. So these are port cost center projects, certainly for the construction, and then the revenues that come in from the rental car contracts. These revenues fund all of the existing assets that are related to parking and rental cars, but they also go to help fund other assets in the port cost center that don't always cover their costs. The other thing we do with these revenues is we pay debt service on bonds that we've issued. So bonds that have been issued in the past for parking rental car improvements. And we'll be issuing more bonds here next year that are backed by the customer facility charge. And the CFC, similar to a passenger facility charge, you approved the authorization of this back in January of 2014 and is helping to fund a portion of the construction cost of this. We'll be back sometime next year with a bond issue that will be backed by the customer facility charges. And so today we're just approving the construction costs for the design, and then also the rental car contracts. Funding of the debts will come early next year, I think, is when we'll be doing that. So with that, I'll stop with the intro. I'm going to turn it over to Eric first, and we'll do his item, and then Shane will do the rental car contracts.
Great. Thank you, Vince. Morning, everyone. Today I'm requesting approval to amend the public improvement contract to J.E. Dunn Construction Company. See if I can work my mouse here. There we go. Sorry about that. Approve a public improvement contract amendment to J.E. Dunn Construction Company for the remainder of their construction work on the consolidated rental car and parking additions project, as well as the rental car center out at the airport here for approximately $191 million. I believe you've seen earlier versions of this rendering before. This is an updated rendering. As you can see, it's large, it's transformative, and it's going to be here for a long time. The new exit plaza, starting from the right, will be constructed. The quick turnaround facility started operations in March. Parking additions and a consolidated rental car facility in the center. And then last but not least, the rental car center on the far left of the screen. Scope is summarized as shown. I won't get into the details, but it's largely three parts. The first part is currently under construction, started in August. That's the enabling work. That clears the footprint for the two facilities that we've mentioned earlier, parking additions and consolidated rental car facility and the rental car center. So we're getting ready to construct those starting at the end of next year. Schedule is as shown. You've seen us before. This is the fifth major commission action for this particular contract. As mentioned earlier, we started construction in August, just a few months ago, and we will be scheduled to be substantially complete November of 2021. So it's a long project. There's a lot to do, and we're just getting started. Budget is summarized as shown. As Vince mentioned, this is primarily two projects encompassed with this project. Packer budget is shown on the left. RCC budget is shown on the right. The primary cost centers for this work is the port cost center. A little bit of the RCC is shared with the airline cost center. And Kimberly has helped us with our small business goals. They were set earlier in the project. 10% for design services, 15% for construction services, and we're currently on target to meet these goals. Staff requests approval of the executive director's recommendation.
Any questions? Okay, I'll ask for a motion and second.
So move.
All in favor?
Yeah.
Any opposed? Thank you.
Good morning, Commission. Let's see if I can pull this forward. So just to kick off, let me see if I can figure out how to use the mouse now. Use the wheel. This agenda item requests approval to enter into 5 new rental car concession and operating agreements with Enterprise Alamo National Holdings, LLC, the Hertz Corporation, Avis Budget Car Rental, LLC, and Todd Investment Company, doing business as Dollar Rent-A-Car and Six Rent-A-Car, which is a new entrant to the Portland market. I'm going to spend a little bit of time talking about the background of rental cars here at the airport, a lot of which Vince touched on, what the process we've gone through over the past couple of years, the Packard project and the financial arrangement with respect to the customer facility charge, the timeline, which you've also seen, and then just a high-level summary of the business terms. But before I do that, I want to acknowledge the hard work and dedication and effort that has gone into this project over the last really 2.5 years, not only from port staff throughout the port, but also our rental car partners. This has been a heavy lift for all of us. We have a few of our rental car partners in the room today with us today. Ann Morrison is the VP of Real Estate for North America for Avis Budget Group. She's in the audience. She's joined by John Butsky, who's the PDX General Manager for the operations here at the airport for Avis Budget. Therese Chapdelaine-Irons with Todd Investment Company actually was here earlier and had to step out. She represents Dollar. We have Connie Gurich, Director of Properties for Hertz Corporation, and she's joined with her general manager, Dirk Mason. And we also have Erica Rosenfeld, who is our new general manager for the Enterprise Alamo National brand. That it's her 3rd day on the job, so she's drinking from a fire hose. We don't have a representative from Six with us in the room today, but I understand Mick Erlinson is watching from Chile. He's on vacation, and he's trying to get the YouTube feed to show up. So just want to acknowledge the hard work and dedication from all those folks to get to this point. My mouse is not working. Okay, there we go. So the last time we conducted this process really was in 2010. It resulted in 8 rental car agreements that began in 2011. At the time, due to constraints we have with the P1 parking garage, long-term, short-term, and also our rental car center, we restricted the on-airport opportunities to 5 brands. That equates to roughly 75% of the market. The other 25% of the market has operated at PDX since 2011 with shuttle operations to and from the terminal building. You can see in the slide just the amount of growth since 2010, representing about a 53% growth from $129 million in 2010 to last year, just under $200 million in sales and revenue just from Portland, from PDX alone. And the logos at the bottom there are the brands that have operated on airports since that time. As Vince mentioned, we set out with this project to really bring as much as 100% of the rental car market on airport. We know not only that does that provide the best customer service experience, all these folks can access the rental car facilities from a short walk from the terminal rather than getting on airport automated people mover or a shuttle system that takes them away from the airport. It also has environmental benefits. That 25% of our off-airport market circulates on the roadway with their individual shuttle buses. So we'll see a reduction in congestion and emissions from that when this facility comes online. We also have tried to maintain flexibility through the design in this project. And I'd say the most unique feature of that is between levels 3 and 4 of this garage facility, there's going to be a ramp connection so that we have the ability to respond to market changes in parking and rental cars over the life of the building. Mentioned 2.5 years of discussions and negotiations. They concluded in July with the invitation to bid, which we released. We received bids in September, and based on the bid structure we set and the bids we received, we canceled the bid and essentially entered into a direct negotiation process with the 5 entities that we're asking approval for leases for today. The 12 brands that you see on the slide here are the brands that will operate from the facility in November of 2021 when it opens. I'd like to point out there's a couple new entrants, 6 Rent-A-Car, which is from Germany, and also we have 2 car sharing operations, which is will be unique to this airport, and for the first time, Zipcar and Enterprise Car Share are bringing both of those brands. So we're excited about that. This is a rendering of the rental car lobby itself as you're looking from the on-grade connector between the long-term and short-term garage. Here you're looking actually towards the terminal. You can see the bottom floor is where the rental car transactions will take place. It's about 20,000 square feet of lobby space. Today we have about 11,000, so it's a nice addition, and we'll have 44 counter positions that the rental cars will occupy for their transactions. It's about an 850,000 square foot ready return space in the garage, which translates to roughly 2,100 revenue parking stalls for rental car operations, and today we have just over 1,100, so some nice growth there as well. You saw on Eric's slide the $282.2 million cost for this project. Approximately 56% of that is being paid for by our customer facility charges that we started collecting in 2014. We collect $6 a day with a 4-day cap from every rental car transaction here. The debt will be CFC-backed standalone debt and 30-year bonds. The expected closing is in late spring of 2019, and our finance team has all been established and set up. Unique to these length of agreements and CFCs is a contingent fee obligation that is in the rental car agreement. And essentially what that is in the event that CFCs don't account enough to pay the debt service in a given year, the rental cars have an obligation to pay that backstop. Along with that comes a reimbursement from the port in the event that does happen. We don't think that'll happen, but it's one of those terms that's essential to these agreements. Timeline is we're here today with our recommendation. Final Packer design will be in March. We'll give access to the rental car companies to the facilities in approximately May of 2021. They'll have 6 months to complete their build-outs, and then the leases will commence November of 2021 when the building opens. It's a 20-year agreement with a 10-year option term. At years 10 and 20, we have the ability to open the agreement and rebid or renegotiate it. Along with that comes a minimum annual guarantee reset if we do not open the agreement or rebid. The property consists of the consolidated rental car facility and the quick turnaround facility, which opened in March. Together, those equate for about 1.2 million square feet of space the rental cars will occupy. So it's a big footprint. Allocation was based on the minimum annual guarantees that you see in the agenda item. I won't spend a whole lot of time on that. And the revenue components that go along with these agreements are the percentage fee that they pay to operate or the minimum annual guarantee, whichever is greater, and then the premises rent for the footprint of the facilities that they sit on. You saw in Mrs. Holt's presentation the 2.1% ACDBE goal that has been set for this contract. We're currently at 1.3% goal. This agreement is 3 years away, and we've set the 2.1 per the disparity study that was just concluded. So with that, staff is seeking approval to enter into new rental car concession, lease, and operating agreements with the 5 entities that are listed there.
I have a wonky contract question. On the 10-year extension, I saw that it's a port's option to extend for that 10 years.
Correct.
That's an extension of 10 years on the terms that are in the contract, or does that require opening the contract for renegotiation?
It could be either or. Yeah.
And again, that's the port's option, whether
the port's
reopens.
sole discretion.
So if the port decides to exercise the option, the rental car companies are bound then to extend the lease.
Correct. Yes.
Thank you. Please.
Thank you. Just a quick question. What is the concessionary recovery fee, and how much is that per year?
The concession
initial contract year.
The concession recovery fee, that is the fee that the rental car agencies pass along to the customer. They're not obligated to, but may pass that on to the customer. It's listed as a separate charge on the transaction when you rent a car, and it's 11.11%, or will be in the future agreement.
Total.
11.11% of the transaction cost.
Coming to the port.
It goes to the rental car companies, and then they pay their rent based off of that, or their fee, not rent.
Oh, so okay.
It's a separate line item. So when you rent a car, you'll see.
That's not a separate additional income source.
No.
Okay, got it.
You may have covered this. I apologize if you did, but the universe of vendors who will operate here is a larger set than we're negotiating now. What's the status of contract with those folks who are on the outside of this agreement?
So today we have let me see if I can answer your question, if I understand it. We have 8 rental car agreements today. 5 of them are on airport. The other 3 are off airport. That represent
remain off airport?
They will remain off airport until this facility opens, correct. And then once it opens, everybody will be on airport.
Under the same contract terms?
Yeah, under the same contract terms, yes. Yes, yeah.
Same contract terms, different financial
obligations. Yeah. The existing agreement continues until this agreement goes into effect in November of 2021.
Madam President, first of all, thank you, and I want to thank the rental car companies as well. I know this is a long-term agreement. It's a marriage, right? We are in this for the long haul, and I think you always want it to be a good marriage. So I just want to say thank you. I know a lot of work has been done. How people get around continues to evolve. So there's a little bit of a leap of faith here too, but I think we both are in it for the long haul. The port and the rental car companies. I mean, this is a really important partnership that changes the face of how people get in and out of PDX, and I think it's a really consequential and important agreement that's kind of moving forward. And I think, given the presentations we had earlier today, I just want to encourage both the port and the rental car companies to look at the DBE numbers, to look at our hiring, to figure out how we can work with each other to continue to improve our diversity and who we employ. And I think, again, this partnership is just one where I think we can benefit from each other. But it seemed like the rental car company numbers seemed low comparatively, and it may just be one of these things of how we measure and what we're looking at. But I think it's one of these things that it's not a contractual, thing. I know we have a goal, but I think that there's a lot we can do and benefit from each other given the conversations we've had today, and where the rental car looked like it was low. But anyway, I really wanted to say thank you. This is a great partnership, and nice to see it hopefully ratified in the next couple of minutes.
I wanted to make sure there wasn't anyone who wanted to speak on this. I think Ms. Gurich, you're signed up to speak. Please come forward.
My name is Connie Gurich. I am the Director of Properties for the Hertz Corporation. I just want to echo what you just said. This was a marriage contract negotiated over 2 years in a very collaborative way. It took us 2 years, actually, to discuss all of our desires, give them our scope of work with the staff, work with their consultants, with their finance consultants, the design team, because we actually had preferences on how we wanted this place designed, and more importantly, on the location of the facility. You guys have really given us a home run. The location of the facility in front of the terminal is the best customer service you can offer anyone. They can come out of the terminal, get into the rental car, and off they go. It's the best service ever, and it's not easy to get, ever. This is one of a very few airports that agreed to give us the space in preference to any other use, and we appreciate it. I just want to say thank you on behalf of the industry. It was a great collaborative effort, We've enjoyed working with all of them, and we'll continue to enjoy it until this building is built and we move in. Yay for that day. Thank you.
Thank you very much.
Thank you, Connie.
Thank you.
Any further questions or comments? Okay, I'll ask for a motion and second. All in favor?
Aye.
Any opposed? Thank you.
Thank you.
Keith, I think you have our next agenda item. Next two.
Good morning. Almost noon. The next agenda item requests approval to enter into a facility lease with United Airlines for a large aircraft hangar and associated ramp located here at PDX. United is a valuable long-term partner of ours. They are approximately 12% of the market share and the fourth largest carrier at PDX. Port staff, led by Caitlin, has been working with United over the last 2.5 years to negotiate an agreement with the goal of repairing really an old hangar facility that came to us from the Air National Guard lease into a property that can now be used as a major maintenance operation for United. So with that, and this is Caitlin's first actual agenda item, I'll ask Caitlin to summarize the item.
Great, thanks, Keith. Before I get started, I'd just like to recognize United Airlines as well. We do have a representative in the audience today, Paul Tracy, back there. United's been a great partner in this negotiation, and I just wanted to make sure that you are all aware that they are here and in full support of this item. So with that, get started. Staff requests approval to enter into a facility lease with United Airlines for approximately 30,000 square feet of hangar and office space, as well as adjacent ramp and land for the operation of an aircraft maintenance facility at the Portland International Airport. I'll provide a little bit of background for you all here who aren't familiar with the lease that was put into place with the Oregon Air National Guard back in 2013. When that was put in place, this Parcel C was a piece of the execution of the lease. So Parcel C was given back to the port in 2016. It consists of 3 buildings, 7755, 7757, and 7759. The 2 smaller buildings are ground support buildings, and 7759 is a large aircraft hangar. It also includes the associated ramp and ground that you see outlined there. Just for your reference, here's a photo of that hangar, and you guys would also see it if you're taking off on the south runway or out these windows over here. It's a large hangar on the south side of the airport in between the Air Transportation Center and the Oregon Air National Guard. When this building was taken back, there was some significant issues associated with this building. First of all, it had been vacant for 10 years. So due to that vacancy, there's a lot of repairs that are required in order to bring it up to a commercially leasable condition. It was also originally built to house C-130s by the Air National Guard, and therefore it was not built to city code, it was only built to federal code. So taking both of those items into account, we really needed to take some time to assess the condition of the building. So the port did a condition assessment in 2016 to determine which of those repairs were required for occupancy. During this time frame, we were actually approached by United Airlines, who was interested in leasing this hangar for aircraft maintenance. So this is the proposed facility lease for United Airlines. The leasehold is shown above. The hangar 7759, as well as adjacent ramp, and also a parking space out on the aircraft ramp. United is proposing to do what they call a checks in this hangar. It's basically a preventative maintenance check on the engine and cabin of an A320, as well as the operations check on the cockpit and emergency flight controls. This is currently done on the ramp at PDX outside of the gates, but United was really looking for a more controlled environment in order to do this maintenance at. And in preparation of this facility lease, United actually moved a large portion of their A-checks that they do from Seattle down here to Portland over the last year. So over the last year, they have hired an additional 20 mechanics in the area in order to bring this service to PDX. And in the future, they would hope that utilizing this hangar would actually bring additional maintenance to the area. When they expressed interest in this hangar, they were made aware of the condition and the repair that was necessary, as well as the lack of an occupancy certificate. And they were willing to take on those repairs in conjunction with a long-term facility lease and reimbursement for a portion of those repairs. So here you can see the key business terms for this transaction. This would be a 10-year lease with United with 2 mutually agreed upon 5-year options. There would be a $2 million reimbursement by the port, which would be paid in a lump sum payment out of the Port Cost Center upon issuance of an occupancy certificate, and also verification of some port-specific items that we would require out of the facility. You can see in the table, the rent for this facility will be approximately $585,000 per year, which results in a payback of just over 4 years for that initial port reimbursement. The United project in general, they'll be contributing another $2 million in addition to the port's $2 million for a total of a $4 million project, which will, the United $2 million will be going to tenant-specific improvements that will be for United specifically. But the whole project will have a DBE participation goal of 14%. United has committed to this goal because they have a core competency of diversity and inclusion in their company. They have many initiatives through their company, one of them being community partnerships. And these community partnerships are advanced through an executive diversity council that they actually maintain at United. United has expressed interest in partnering with the Portland Metro Workforce Training Center, a part of the Portland Community College Extended Campus in the Coley neighborhood, right in our back door here. And while it hasn't been determined what that partnership will look like, they've expressed interest in internships or job shadowing, basically something that will help educate the local community who's interested in aircraft maintenance. So in addition to those items, United has also been a great partner with the Port of Portland here. They have 2 additional facility leases in our cargo center, as well as a ground service equipment building on the north side of the airport. And they've also been providing air service to PDX since 1927. So in regard to timeline for this project, they would like to get started as soon as possible, pending approval. They would be building out and renovating the facility for approximately 6 to 8 months and would intend on moving in the summer of 2019. So with that, staff recommends approval entering into a facility lease with United. I'll take questions.
Thank you. Great presentation.
Thank you.
Does anybody have questions on this one? So I'll ask for a motion second to approve. All in favor?
Aye.
Any opposed? Thank you.
Thank you.
Great job.
More to go here. This agenda item requests approval to sell approximately 38.4 acres of property known as Lot 3 out at Troutdale Reynolds Industrial Park to FedEx Ground. This is really the 3rd installation, I'll call it, of property for FedEx. They are, if there is an anchor tenant out at Trip, it is FedEx. They made their initial investment back in 2008 in the depths of the recession. Frankly, helped us make sense financially of our phase 1 improvements that we did out there, as well as the acquisition of the properties. So we see this as kind of the full complement of FedEx property now with, and Joe will go through the map of lots 1, 2, and now 3 with this particular deal. Just quick background. I think, as you know, we've been working hard out at Trip since 2007 when we acquired the site. World War II all the way through the mid-90s, late 90s, was an aluminum smelter by Reynolds Alcoa. We acquired the site. It was on the Superfund list. It still is. So there's a lot of complexity with any deal that we do out at Trip, and you saw that in the agenda item. Again, we appreciate FedEx in particular because they were the first private company that went ahead and took the risk on a Superfund site. And there are a lot of management rules and regulations around how you operate on the site to maintain your non-liability status, essentially, as a landowner. Finally, I would just say that the team working over the last 10 years has done a great job of collaborating
with the city, within the region, state government, federal government, both on the regulatory side of things and on the funding side of things to make TRIP really the thriving center of commerce that it is today. And I think we're all due to go back out and take a look. It's pretty remarkable what's happening out there. So with that, I will have Joe describe the item.
Thank you, Keith. Good morning. This agenda item requests approval to sell 38.4 acres in Troutdale Reynolds Industrial Park. I will refer to that as TRIP going forward at the FedEx Ground Package Systems, Inc. I describe the background, the development status of TRIP, and I will then discuss the buyer, the past property sales, and their existing operations and future expansion plans. They present the sale property, TRIP Lot 3, summarize the option agreement, and then present the sale terms. Okay, this slide shows TRIP, FedEx Ground ownership on lots 2 and 3, and the sale property, Lot 3. This is the former Reynolds Metals aluminum plant site. It was designated as a fund site in 1994, and it was subsequently acquired by Alcoa in 1998. The port purchased TRIP from Alcoa in 2007, and TRIP was later annexed into the city of Troutdale in 2007. The port implemented Phase 1 development for roads and utilities from 2008 to 2010, and then Phase 2 development from 2011 to 2018, mostly focused on wetland fill and mitigation program. The port, along with our partners Alcoa and FedEx Ground, were recognized for this TRIP development and received EPA's Phoenix Award in 2011 for the top brownfield redevelopment project in the country. Our FedEx Corporation is one of the port's valued integrated customers, providing crucial logistics services at PDX here and throughout the region, and it includes subsidiaries FedEx Express, FedEx Ground, Freight, and Office. They had revenue last year of $65 billion and have over 425,000 team members. The buyer is FedEx Ground Package System, Inc., with headquarters in Pittsburgh, Pennsylvania. They offer business-to-business package delivery and residential services to the United States and Canada. FedEx Ground has grown to about 25% of FedEx Corporation's operations, with revenue last fiscal year of $18 billion, and they have 105 team members and handle roughly 8 million packages per day. This is the aerial photo that shows the FedEx Regional Hub on Lot 2 and the sale property here in the foreground. The TRIP's master plan and the Lot 2 configuration was accommodating to FedEx for their industrial land requirement. FedEx established a regional hub at TRIP by purchasing 77 acres on Lot 2 in 2008. The sale price was $16.9 million. FedEx constructed their hub in coordination with the port's Phase 1 road and utility improvements. FedEx purchased an additional property, Lot 2, for a little over $3 million in 2016. The purchase and sale agreement for Lot 1 included option rights for TRIP Lot 3 for future expansion. So the option term was 2-year periods with $250,000 per year option fee, and that was reimbursable to FedEx Ground if they exercised their purchase rights. The sale property right here is TRIP Lot 3 is 38.4 acres. However, it does include wetland area in the treat area here to the northeast. These wetlands are considered the highest valued wetlands at TRIP, and they were avoided as part of the port's extensive Phase 2 wetland fill and mitigation program. The result of avoiding the wetlands and the buffer areas is that the developable area of Lot 3 is 23.43 acres. FedEx Regional Hub was initially 441,000 square feet in operation on the summer of 2010. It was later expanded to 633,000 square feet in 2013. The facility represents a $130 million investment by FedEx Ground. The FedEx Hub has over 1,450 employees and independent contractors, and along with the employees for the recently opened Amazon Fulfillment Center across the street, that exceeds 3,000 employees. and that is significantly higher than the roughly 800 peak employment at the former Reynolds aluminum plant site. FedEx Ground is an ideal tenant and partner and member of the TRIP Association. This is the FedEx hub and sale property as it is today. It's got the distribution center in the middle, load wings A and B, and this B was expanded in 2013. On lots 2 and 3, it includes several extraction and monitoring wells that are part of the groundwater treatment system for the Reynolds environmental site remedy to responsibly manage future contaminated construction water. The port will install a water line here, extension to the Northwest Swigert Way that will be able, with a discharge valve, to allow disposal of dewatering fluids containing fluoride to the groundwater treatment system. And then that will subsequently be discharged under the existing national pollutant discharge elimination and eliminating system permit. The new water line is estimated to cost $200,000 and benefits future TRIP development by the port, by the city in Swigert Way, and by existing and new TRIP tenants. This slide shows the FedEx hub at full build out on 130 acres. Please note just the irregular shape of the developable area of Lot 3 due to the wetlands. The FedEx expansion plans include constructing another load wing C here, expanding the distribution center, constructing both employee and truck parking on lots 1, 2, and 3. The hub will be over 800,000 square feet at full build out, and also the capacity of the hub will increase to over 60,000 packages per hour. FedEx expects to employ 1,800 team members at full operational capacity. That was a lot of detail and on several. So if there's any questions at that point, I just can't emphasize enough that FedEx Ground really walked with us throughout the TRIP development and was professional and responsive throughout, and is not only a valued customer but a true partner at TRIP. On to the sale terms. If I can get. There we go. Okay, sale terms. For Lot 3, it's 38.4 acres, 23.43 developable due to the wetlands. The sale price is $6,889,124. That is based on $6.07 per square foot for the developable area of the property. That is considered the fair market value for industrial property in this submarket. If this sale is approved today, port revenue from the 3 property sales to FedEx Ground will total $26.8 million. There's also a credit for the FedEx Ground option fee and extension fee of $500, and the new dewatering line to the groundwater treatment system will be constructed by the port post-closing within 1 year. There is an escrow holdback of $200,000 to ensure that construction completion. The purchase and sale agreement also includes a mutual indemnity for both parties, similar to the past 2 property sales. It's limited to $1 million for a period of 15 years, and this indemnity does not relieve Alcoa of any of its environmental obligations. Lastly, there's a continuing obligations agreement for all parties to comply with the Reynolds Metals consent decree in the environmental remedy. Port staff recommends approval of the executive director's recommendation to sell 38.4 acres of property and TRIP to FedEx Ground Package Systems, Inc.
Thank you. I just have a question, and I know it may be difficult given the continuing obligations there. Sense of what the return on investment is for these 3 lots, given what we've put into invested in the property.
What I would say is that maybe not off the top of my head for just the 3 lots. What we have is a running pro forma for the overall TRIP phase 1, 2 plus acquisition. We are with this sale, and then we have 2 more relatively smaller sites, lots 4 and 5, to go. And we are going to be an internal rate of return over a 10 to 15 year profile, 5 or 6% return, which is quite remarkable, given where we kind of started this whole thing. And what I'd say one of the secrets to the financial success here for the port is the legislature passed the Industrial Site Readiness Program, which essentially says when you ultimately do get job creation on the site at income levels that meet the program, you get some of your acquisition and development money back. And so we're going to get that probably through mostly, I'd say through the Amazon, a lot of the management positions, some of the higher paid salaries, you start to get a bit of that increment that comes to the state back to help offset. And with that, you run the pro forma and you start to a place where it's a sustainable return. But it has been a heavy lift financially, I'd say, throughout that time.
Thank you. Certainly on the job comparison, the number of jobs, that's pretty remarkable. So I'm sure met the goals there.
President, I think having just been briefed on the Superfund obligations in the Willamette River, this kind of rings out. One, it's great that it's developable land, and that is a good thing that it's being turned into productive. And I know we've had discussions about long-term lease versus sales, about what that means for the port. Is it better to hang on to it and lease it? And I think those questions have been answered, but it's still the long-term fund liability just raises a concern. And I know with chain of title, we can sell the property, but we're never released from the obligation for that long-term liability. And I just want to make sure, and maybe this is a question for Dan, that we have thoroughly kind of through that with a very long-term vision. And I know that FedEx, by purchasing it, joins that chain of title and is right in there with us in it. But have we thought about what our long-term environmental exposure is, and have we converted that into what we think the financial obligation is long-term?
So Commissioner, maybe I can take a crack at that. So for the acquisition of TRIP, we went through extensive due diligence period and positioned ourselves under for instant purchasers for the acquisition from Alcoa to the port. We are structure all of our subsequent sales to future owners so that they also qualify for innocent purchaser status. And so that is why all of the continuing obligations and some of the ongoing actions, all parties need to comply with those. So we've insulated ourselves and tried to insulate future owners from any of the liability that now Alcoa has. And to Alcoa's credit, they've been a very responsible party here and work with us both on the acquisition and the development plans, as well as implementing their remedy going forward, and then still allowing development and use of the property.
Thank you. I assumed as much, and I was just making myself feel better by asking the question.
It is a great question.
If not, I'll call for a motion.
Second.
All in favor?
Aye.
Aye. Opposed? Thank you. We're adjourned.
Thank you.